Hello, this is Brian Kasal with the FourStar update for September. We're in a very interesting situation where the markets are hitting new highs, and we hear lots of discussion about how the markets are overvalued, and people are obviously very concerned, but yet they keep hitting new highs. We hear talk of bubbles, and the bubble will eventually at some point burst. Interestingly enough, if you follow the Fed model would say that the markets are actually undervalued here because of dividends and in growing interest rates being so low. The Fed is talking about not having any interest rate increases for quite some time. One of the Fed presidents remarked at least into 2015. So while the economy is getting a little bit better, it does appear that there's still a lot of dysfunction in the economy to the point that they're not comfortable raising rates. So that could support a much higher stock market. Yet at the same point, we hear some people talking about how negative the stock market could be from here. The interesting thing about it is the markets have topped out in the 23 to 24 times earnings in 1999. And then of course in the 1970s, I think was the low multiple when we were down in the single digits. So there's no real evidence that supports using a pure valuation model on the market. Obviously, if it was at an all-time record valuation, that would be of some concern. It's clearly not right now, trading at about 16 times earnings. So, there's no real evidence that any of that is true, that we're overvalued right now for sure. Money will flow. We're in a flow of funds market, and money will flow to its best place at any given time. And that is what we think is happening. We've had a rough go with commodities lately, and then just recently some rally in gold stocks. The gold itself is not working, although ironically gold is generally good for the month of September. September is the worst month for the stock market historically, but again, that's one of those issues where just because the market has been in the past bad in September doesn't mean necessarily that it will be bad in September as we open the month hitting new highs. So there are certainly facts out there, and there are certainly opinions. We tend to follow trends and make sure that we're in the areas of strength where we need to be and avoid the areas of weakness to the extent that we can. So those are our thoughts for now. We'll be back with more market updates later on. This is Brian Kasal with FourStar Wealth Advisors with the FourStar Update.